Welcome back. You're watching NSE FinWiz Season 2.
My experience says for the share trading, at least when you get into the share trading, it will take at least 2 years to at least learn how to do a share trading. And coming to the mutual funds, if you are investing when the market is very high, and after 2 years when you see that the market goes back to 10,000 and you see you had bought it for 30 rupees and now it is 5 rupees per unit. So these are a very common thing. So how can we really, I'm really confused. I stopped in between investing into mutual funds because of this reason. Somewhere I got a good yield when the market went to 16,000, but after that, when I had invested at that point of time, when I saw after 1 year it was 5 rupees. So these are some of the confusions which are really, which I want to get a very good solution for this, so that I can go back to the mutual funds or start the share trading.
Correct, that's correct. I mean, a lot of people had lost a lot of money in mutual funds. Kalpesh, you want to?
So yours is a very, I would say, valid confusion. If you were to look at it on a pure investment basis, obviously you're the loser. But now if you put the aspect of goal setting or a purpose, which I just mentioned some time back, I think that illusion which you have would surely go away. Because mutual funds, in fact, is a much more safer way of trading or probably investing in equities rather than shares. Now, I really don't know your equity profile, but if you are telling that a 30 rupee NAV could come down to that level which you mentioned, probably try equating it what that share would have lost in that same period. It would have been surely more drastic than the mutual fund NAV. Because mutual fund is a basket of stocks. Your risk is not with one particular company. So you are buying the whole, probably the whole Nifty or the whole Sensex, or you're buying particular diversified fund which has a mix of everything. So you have your pharma sector, you have your IT sector, you have FMCG, you have infra. You have a whole basket of stocks in that. The stock selection is done by a fund manager who is an expert. Second, it doesn't hit you that much, because if you adopt the SIP route, you are again only, giving away a little bit of your monthly part of your income for investment. You are not going head down into the market. That it hits you so much. Again, 5 years is a must for looking at any equity investment. Don't look at it with a 2-year horizon. Now, probably you are lucky or unlucky that what happened to you in that 2-year period. But now, to start on a fresh note, set a target, get in for a long haul, and then you see what equity mutual funds can do.
Okay, Kalpesh, also another thing is that most of them would think that I'm young, why should I invest now? Let me wait till my 35 years of age. And they also have a lot of expenditure at this point. So would you say that it is okay to wait for another 5 years, 8 years, and then start investing? Maybe when you've also built a corpus, you've done all your fun and investments.
Assume you want to reach a corpus of 5 crore when you are 60. Probably that's the cutoff age which we say that we would call it quits and retire from our active working life. So you want to call it quits, and at the age of 60 you want a corpus of 5 crore rupees. Now we had a small table, and we, in the whole exercise which we do day in day out, we keep on bouncing these numbers. So just for understanding through numbers, for a change, a person at the age of 30 would require an investment of approximately 14,000 rupees per month, fetching a return of 12% in any investment which gets 12%. It's not asking for the moon. Okay, it's just probably if people were to invest in stocks, it would be much more completely, but I'm taking a very reasonable type of a return, 12%, but it has to be predominantly in equities. You would require 30,000 rupees. 14,000 rupees at the age of 30. You delay your decision by 10 years. You start taking that investment at the age of 40 to reach the corpus of 5 crore rupees. The monthly investment becomes 50,000 rupees per month. Then for the remaining 20 years. And some guy starts doing that at the age of 50. Any guesses how much would he need per month? It's 2 lakh rupees. Now the story doesn't end there. In fact, it starts. because there is something which we are all into, which is our life. At the age of 50, probably in our life cycle, we are at a stage where many of us are, have to dispense many of our duties. Let's put it that way. So your child's marriage could be on your head. You would be wanting your children for higher education if that has not been planned. Your health would not be as active as what you were at 25, 30. So at the age of 50, if you want to aim for a corpus of 5 crore, it becomes 2 lakh. So exactly like what she said, when you are 30, you just need 14,000 rupees a month. And by the time it reaches 50, it balloons up to 2 lakh rupees.
You're watching NSE FinWiz Season 2. Don't go away. We'll be back soon after a short break.